awesome real estate people turned to new energy 20 years ago. Yes, I'm talking about the founder of Yinghe Technology, Mr. Wang Weidong. He used to be marketing director of Shenzhen First Real Estate Co., Ltd. He is a senior real estate veteran. He can leave the store. They are the core industries of the new energy industry. Let's first look at the lithium battery industry. The upstream is raw material. The upstream includes cathode and anode materials. The midstream is lithium battery production equipment factories. The downstream is automobiles. In electronic and other applications, the companies we are going to talk about today, Yinghe Technology and other two peers, are in the middle and upper reaches of the lithium battery industry manufacturing lithium battery production equipment. Their downstream customers are lithium battery manufacturers, such as although the company's main business is related to lithium batteries, but there is also a business that accounts for about 1/3 of revenue. So the company currently has two main businesses. One is lithium battery production automated and equipment. The other is the business related to e-cigarettes. The lithium battery equipment they produce looks like this, mainly covering the middle and front sections. And the front section. When enterprises expand production in electronic factories, it will be easy. Once the expansion stops, they can only maintain the existing equipment and wait for the next round of technological updates to produce new equipment to replace existing production line equipment. Analyzing this type of enterprise is a bit more complex than regular enterprises. I plan to evaluate it from two perspectives. One is the internal development of the enterprise, while the other is peer comparisons. And let's first look at the company's Adonis development. Yinghe Technology is located in Guangbin, Shenzhen. It was founded in 2006. It was successfully listed on the growth enterprise market. It went public in less than 10 years. The speed is quite fast. Let's look at the revenue. The epidemic has been the hardest time for us in recent years, but it's the best time for them. So sometimes people's joys and sorrows are different. In 2020, I think it's still, I thought 2023 would be the hardest, but its revenue has almost doubled every year from 2020 to 2023. What is a historical award? This is the historical award. In 2024, I feel like I can take a breath. The company's revenue has slightly declined. Overall, it's a trade-off. One's gain is another's loss. Revenue grows so fast. Will it increase revenue without increasing profit? Yes. This company is strong because while revenue grows, its profitability has also kept up. Although gross profit margin slightly declined in 2021, but it rebounded in 2023 and 2024. It dropped from about 12% in 2020 to 9% in 2021. But by 2024, the gross profit margin has reached 18%, almost doubled. Revenue quadrupled from 2020 to 2024. And gross profit margin also nearly doubled. It's really impressive. Will it be like many industries? Profits without cash. But the company's free cash flow is higher than net profit. It focuses on both profits and cash flow. It increases both revenue and profit. Many companies in the process of development have a problem of declining total asset turnover. But this company doesn't. The total asset turnover ratio rose from 29.5% to 57.7% in 2024, almost doubled. It's quite impressive. Many people say that the upstream and downstream of the new energy industry, car factories delay electronic factories, equipment manufacturers are delaying payment. It is indeed visible that since 2020, Yinghe Technology's accounts receivable has rapidly risen, tripled to 14 billion yuan. But the downstream delays me. I also delay my upstream, forming a dynamic balance. This kind of atmosphere in China should be cured. How can it be built layer by layer? After the Sholen in 2023 and 2024, for enterprises that cannot pay they in a timely manner, firmly cut off. The backward production capacity should be exited in time. Let's continue to look at the bad debt situation. You may ask, with so much accounts receivable, will the bad debt ratio be high? Overall, not in the new energy industry. overall upward. Battery factories are busy expanding production. They won't easily offend core equipment suppliers. Business payments is inevitable to delay, but what should be paid will still be paid. With annual revenue approaching 10 billion yuan, the bad debt ratio is about 5 per 1,000. That is to say, for every 1,000 yuan of revenue, about 5 yuan cannot be collected, even lower in 2024. Overall, their bad debt rate is not high and has not affected profits. In terms of human efficiency, the per capita output value of the company increased from to 1.18 million yuan in 2024. The per capita net profit increased from 40,000 yuan to 140,000 yuan in 2024. Wow. The per capita profit is almost catching up with the per capita output value of some construction enterprises. Say that. This company is deeply tied to CATL. As mentioned earlier, when battery factories expand production, it needs new production lines and equipment. Equipment factories have stronger demand. We look at future growth space from the demand side. CATL's production capacity accounts for about 35%. It's nearly double that of BYD's 15%. The two companies together account for half of global lithium-ion capacity. We can find the fixed asset investment item. Find the fixed asset investment to see if it matches Yinghe's lithium-ion revenue. The total amount of construction in progress from 58 billion yuan in 2020 to 30 billion yuan in 2021, and then stabilized between 25 billion and 35 billion yuan. It seems that the strong expansion phase has passed. The proportion of construction in progress to total assets stays around 20%. There has been no obvious decline so far. But in the long run, capacity cannot be expanded indefinitely. It will eventually return to a steady state. We compare the ongoing projects of CATL with Yinghe's lithium battery business's performance. The revenue related to Yinghe is about 0.9 with Ninde times ongoing project. The correlation between Xiandao and CATL is about 0.75. I think it's no coincidence. From the financial report, the proportion of the top 5 customers is not high. If the top 5 customers are not related to CATL, it may mean that the industry is in a period of explosion. Demand is widely released, or the top 5 customers are related companies of CATL, but only have different legal entities. Just now, we looked at the perspective of the company to understand the basic situation of the company, but we also need to see whether the company itself is strong, or the industry dividend is more dominant. Now let's compare with peers. We selected 3 peer companies, which are lithium battery production, equipment manufacturing leader Xiandao, and the rising star Nako. Shandao, it is the largest company in the lithium battery equipment field. It has evolved from a small factory into a global leader in lithium battery equipment. It only took 15 years. Its global share in 2024 is about 22.4%. NACOL was founded in 2000. Lian's headquarters is located in Xintan, Taipei. It was an unknown small factory 5 years ago. It has experienced explosive growth and listed on the Beijing Stock Exchange in 2023. It should be noted that due to the scale of Nako is significantly smaller than the other by an order of magnitude. Therefore, in the chart, Nako is generally on the right axis, and Yinghe Technology are generally on the left axis. On the chart, Yinghe and Haiji are green dots. Xiandao Haiji is orange dot. Nai had a gray dot. Let's first look at the revenue of Xiandao. It is indeed the leader, with total revenue about double that of Yinghe, reaching 166 billion in 2023. Its revenue is only about 1/8 of Yinghe's. Both companies are not all related to off-site business. Xiandao's off-store business accounts for about 2/3. Before the e-cigarette business of Yinghe took off, was almost all related to the store. But in recent years, e-cigarettes have performed quite well. The revenue related to e-cigarettes accounts for 1/3 of the total. That is to say, the proportion of off-store related revenue is similar to Xiandao, accounting for 2/3. The proportion of other businesses is very small, which can be approximated as all related to stores. In terms of lithium battery production equipment business, the scale of the three companies is approximately still the largest, about twice that of Yinghe. In 2023, it reached 12.6 billion. The gap with Yinghe has narrowed to about 1/5. Let's look at the growth. All three companies have basically passed the explosive period, entering a steady or slightly declining state. From the perspective of revenue growth rate, generally flat. Only Nike has a slight increase. Let's look at the quality of profits. The difference in EBT between the three is not significant. The gap is so big. Xiandao Intelligence business will be under pressure. Earnings before interest and tax is only 136 million. Smaller Yaskawa. The EBIT of Yinghe has declined, but it's still close to 1.5 billion, which is acceptable. Nike has a small size. Its performance is still in the climbing stage. Operating cash flow is similar to EBITDA. In 2024, Xiandao and Yinghe fell year-on-year. Among them, Xiandao's decline is more obvious. That one still has growth, maybe related to its smaller size and more stable growth. This also confirms that the demand for expansion of electronics has a significant impact on equipment factories. Xiandao and Yinghe have entered a stable period. It is difficult to have explosive growth in the short term. Let's look at the per capita output value. In recent years, the per capita output value is basically a million. The smaller notch even exceeds the first two for manufacturing. This level is quite considerable. In terms of gross profit margin, except for a few years, it has been roughly in the range of 10 to 20%, which is not very high, but it's acceptable. R&D determines a company's long-term competitiveness, although diet is not high-end. But in the equipment requirements for stability and yield, R&D investment is essential. In terms of absolute amount, Senda Intelligence R&D investment is far ahead of Yinghe, not low, but significantly smaller than the leader. Due to the scale limitation, its investment amount is small. In terms of the proportion of revenue, Xiandao is still the highest, which is in line with its leading position. Yinghe is at the bottom. It has a small scale and low investment intensity. Rumor has it that Yinghe and Kling, I have a good relationship with Hua. After some searching, I found something. They jointly established Shenzhen Yinghe. Xinhua and NAC each hold 40% of the shares. It is an industry-university research integrated enterprise. The company has 42 people. From the official website, focuses on the research and development of solid-state battery. Therefore, the R&D investment of the listed entity, both in terms of amount and proportion, is relatively low, which can also be explained. The total asset turnover reflects the enterprise utilization efficiency of assets. The higher the number, the better. From this indicator, each company is around 50%. The turnover rate of Yinghe is slightly higher than the other two, indicating a better utilization of resources. Xiandao's turnover ratio declined in 2024. This needs to be vigilant. Lithium batteries have exploded in recent years, with the core growth points in new energy vehicles and energy storage fields. The former is self-evident just in terms of cost savings. Electric cars have a significant advantage. The latter has enjoyed a certain policy dividend. Building photovoltaic often requires supporting energy storage. The past 2 years have seen large-scale photovoltaic construction, but everything has its return and limit. The market share of the new energy vehicles has just reached 51%. It will be difficult to increase further. And the economic situation is not good, and consumption downgrade. The sales growth rate of new energy vehicles actually started to decline significantly. Whether it's 60%, 70%, or 80%, 70% or 80% is hard to say. But it can be expected the second half of lithium battery, high growth from 10 to 50%. The growth of lithium battery factories is likely to enter a plateau. When new capacity is put into the market to meet demand, the new demand for lithium battery production equipment will not be as strong as before. Unless solid-state batteries enter mass production, doing a new round of large-scale adjustment or updates, thereby to drive the large-scale transformation of existing production lines. But solid-state batteries likely have a long way to go. It may not enter mass production stage in the next 3 or 5 years. When will this inflection point appear? Which is still unknown. To sum up, the impressive financial performance we can see now is likely to be the highlight moment of several lithium battery production equipment companies. It's a stage of making money easily. I think Yinghe's high growth mainly comes from industry dividends. Of course, the efforts of the company itself are also indispensable. When the industry shifts from rapid expansion to stock competition, it often leads to intensified competition. The stage of bottoming out revenue and once the mass production of solid-state batteries is launched, these companies are expected to enter a new round of growth. There is more than one script. We also need to keep an eye on technology and the demand. Before more incremental information in the short term, due to the end of the expansion of downstream battery factories, I hold a neutral to negative view on these companies.